Hello, dear friends. Uh, Hello, dear friends. Welcome to a new edition of our weekly webinar from Proficient. I am your old friend Shumay Goswami, and today it is 15th of March 2019. We just had our weekly closing a few hours back, and let us take a quick stock of situation, how markets are poised. We are going to keep it very short, and let us see how the uh, global markets, I mean the US equity markets are doing. So US equity markets are taking support from their 200-day moving average, and right now it is trading at 2,816, uh, above most of the important moving averages. So trends are pretty bullish, and that is exactly what we are seeing back home in our Indian market. In India, we are seeing a big breakout to occur in Nifty. In fact, Nifty gave higher closing for 5 successive days on every day of this week, and we actually broke away from this 6 month consolidation phase. Market closed today at 11,426. We are at a striking distance of all-time high, so trends are bullish across all time frames. It is a market to buy on pullback. It is not a market to sell short because prices are high. Now, most of the people I know have missed this rally because they're looking for valuations, or they could be looking for pullbacks. Unfortunately, these things do not occur in such momentum markets. We have to take risk. We have to buy on new high. We have to buy at a higher price. Obviously, there will be risk. Yes, I cannot deny this fact that buying at this level is risky. Not everybody can do that. But anyway, this is a market to manage the risk. We have to take risk, and we have to manage the risk with proper stop loss. Nobody knows where the top will be occurred. Nobody knows where the bottom will be taking place. So we just have to look at the trend. We just have to take a calculated risk and trade from the long side when the trend is up, and trade from the short side when the trend is down, without having regard to the valuation or pullback or whatever. If the pullback occurs, that is good enough. We will exit from our long positions and try to take advantage of the pullback. But since we do not know when the pullback will occur, we have to trade from the long side. Now, having said that, let us take a quick look of what are the stocks to be traded from the long side. Especially, in fact, every sector is looking good enough, but I find energy stocks to be exceptionally well poised. I have been telling about Reliance Industries, ONGC, and NTPC in our earlier editions as well. And these stocks are doing pretty well. Reliance, after making a lifetime high day before yesterday, it is pulling a back. But these pullbacks are nonetheless buying opportunities. Look at ONGC. ONGC is trying to challenge its 200-day average. So this is stock to trade from the long side. Look at NTPC. NTPC actually closed above its 200-day moving average for the first time after many months. So these are the stocks to be traded. Energy stocks are exceptionally doing well. All other stocks are doing well, but there are some exceptions. Some sectors are not doing as well. And if Nifty violates 11,300 odd levels, right now it is at 11,400, little over that. So if 11,300 is broken, then these sectors, mainly FMCG sectors have been doing pretty good for past several months. It has outperformed the overall index. Right now, the cycle is rotating, and we are entering into an underperforming time for FMCG stocks. So FMCG sector is likely to underperform going forward. If Nifty breaks 11,300 odd levels, then ITC, Marico, Britannia, Hindustan Unilever, Procter and Gamble, all these stocks are likely to correct. Some pullback have already started to set in ITC, Hindustan Unilever. So these are the stocks to be traded from the short side in case Nifty breaks the 11,300 odd level. And another sector that catches our eye to be traded from the short side is PSU banking stocks, which consists of many smaller banks. But right now we are concentrating on Bank India. So Bank India is looking weak. It is likely to go lower, especially if Nifty breaks 11,300 odd levels. Another is Union Bank, currently trading at 83 odd levels. So if 85 is not crossed above, you can trade from the short side. And a very important candidate is IDPI. Even when Nifty is nearing its all-time high, IDPI is exceptionally low for some fundamental reasons and trading near to its 52-week low. So violation of some 41 odd levels or 42 odd levels. Right now prices are at 42.80, will probably take the prices of IDPI even lower. So these are the stocks to be traded from the short side, likely to outperform the market towards the downside, especially if it breaks 11,300. So that was a quick recap for this week. I hope you will trade cautiously. Always you have to use your stop loss, use your discretion. And signing off right now. See you next week. Goodbye.